Welcome back to our special show, Debt, Default and Disclosures. The market regulator SEBI just unleashed what could be a seismic change in the world of India Inc., of banking and of the financial sector by declaring that all companies which have even 1 day's default will have to declare it within a day to the exchanges starting October 1st. We've been speaking with lawyers and rating agency experts. We are now joined by a banker, Mr. Pradeep Kumar, former managing director of SBI. Mr. Pradeep Kumar, the lawyers and rating agencies have been glad that an information as important as default is made known to the larger audience, the debt guys, the rating guys, who wouldn't otherwise have known that there is a default to a bank as early as the 31st day itself. But from a banker's point of view, how would you react to the SEBI circular?
See, our bankers report to RBI every month. I think the return is called CRILIC, if my memory serves me right. The CRILIC return should have been open to the rating agencies and to SEBI by RBI, so they could have information the 30th day. Now, of course, they made it the responsibility of the companies to report themselves. I do not know what sort of disorder will create in the system. Suppose somebody defaults for 2 days. Does his rating goes down immediately, and what happens when he repays? Does his rating get rolled back? I don't know. So I think these short-term defaults are not very important. What is very important is to capture the trend. And for that, I think CRILIC return is the best because it tells you in an SMA 0 accounts.
Okay.
So I think they should, RBI should throw open this database to the rating agencies and to see that information will be known to them from the banks themselves. Now it's responsible for companies to report. Companies don't report, what do you do?
But be that as it may, Mr. Pradeep Kumar, now this is law. We have no turning back from it. So do you think...
for not reporting, there will be some... they may have some penalties for not reporting.
Oh, there will be huge penalties. It could go up to the level of even delisting. I mean, companies cannot lightly ignore a listing requirement.
What I said is, the problem is of temporary default. Somebody has defaulted for, say, 5 days, 10 days. What happens? That is all. Otherwise...
No, you will have to report. Under the current rules, it says starting October 1st, even if you have delayed payment by a day, it will have to be reported.
I think that is slightly unfortunate to make it delayed payment by a day. I think the regulators should consult each other. The RBI has various types of accounts, NP accounts as well as SMA accounts. So information is available. They could have used that information then long back, not today. Maybe these, I think, bankers are giving this information right from 2014, if my memory serves me right. And I think SEBI, I don't know why they had to wait for 3 years for that.
Sir, as Mr. Vadlamani of Moody's was telling us, in any case, when you move to IFRS, an account that is stressed will have to be recognized through provisioning on a dynamic basis. So you just can't, you don't have to wait for the 91st day to recognize NPA and make provisioning.
Yeah,
you will have to do it dynamically anyway. Isn't this a good preparatory?
See, I agree that when IFRS comes, we have to see what is the fair value of the outstanding itself. Of course, calculating fair value is going to be very difficult. I mean, whatever guidelines you have, there will be some element of subjectivity involved. Whereas now current provisions are rule-based. We'll have to wait and see which is better.
Okay.
Yes. Any step towards transparency is always welcome. This is a step towards transparency. But maybe I thought we could have a phased thing. They should have ensured that rating agencies information from RBI right from 2014. They should not have waited for 3 years. Okay. I think the banks are submitting information to RBI right from June 14, if memory serves me right. They would have always had 30-day default data with them by now.
Yes.
Now suddenly you are going from 90 days to 0. Or 1?
No, 90 days to 31, sir, not 1. Yes, it is certainly going to change the behavior of banks. But let me get Mr. Sanjay Agarwal in. Do stay on, gentlemen. Sanjay Agarwal of CARE is also with us. Mr. Agarwal, do you think this will make life difficult or easy for a rating agency?
No, so if you see the SEBI circular of June end, that had already made it compulsory to get the no default statement from the companies every month.
Okay.
So this information was percolating to the rating agencies. There were some delays probably because if the default happens in the middle of the month, the information will come at the end of the month. Now SEBI has asked all the listed companies, so companies with listed securities, to provide their information on one-day basis. So it's just that the circular has been made more stronger, because the circular does not cover companies which does not have any unlisted securities, and it also does not cover companies which have not which have defaulted on the working capital, this cash rate limits, etc. But the June circular of SEBI has already asked the rating agencies to collect a no default statement every month at the beginning of the month within 2 days, which covers both working capital as well as term loans.
Okay.
And it also covers listed as well as unlisted companies. So that way life goes on. Yeah, it makes it slightly better, but it goes on. Means I don't think there's too material change.
No, how would you say it's not too material? You know, at the moment we have about 1 lakh crore of mutual fund money which goes into, you know, what are called credit opportunity funds. There, you know, there could be a chance that people default, and it would have bypassed the, you know, stock markets and a large majority of the minority shareholders. Do you think, you know, accidents like Amtech Auto happened about a couple of years ago? Now with this rule, even rating agencies have to be very careful, shouldn't they, Sanjay?
Yeah, rating agencies have to be careful, so there's no doubt about it. But if you see the series of the way the regulators have moved, from November they came out with very clear definition of what are defaults and how they should be treated and all that. In June they came out with very clear circulars how you should take into account the defaults and how the companies have to give no defaults and what happens if information is not available. And now they have come out with circulars saying that listed companies have to provide that information on a one-day basis.
Okay.
So this is a series, this series is already going on, so it's one more step, a very good step in that direction.
Fair enough, Sanjay, if you think that it is only incremental. But my own sense is it is a bit revolutionary as far as listed companies and their investors and the entire gamut of even legal possibilities of creditors being able to take such companies to the NCLT and demanding their pound of flesh. We have to wind up this discussion. Let me just take last thoughts from you, Mr. Pradeep Kumar, first. I know it is being a little unfair, especially on companies which depend seriously on governments or are reined in by court orders. Nevertheless, do you think there is enough in this order to seminally change the behavior of both borrowers and banks? Because both of them were working towards a 90-day cycle, but now they have to work towards a 30-day cycle.
And I don't think cash flows will depend on executive orders. Cash flows are cash flows. If companies default because of lack of cash flows, they will have to be classified. One-day default was not classified as NPA as per regulation. Well, the only thing now they have to report to SEBI. That is all it means.
Okay.
And report to the rating agency.
Yeah, but it's also, it has got a strong...
Yeah, but only thing that will change is the rating agency will downgrade the account once there's even a day's default, and the amount of capital the bank has to set aside will become more.
Okay, well, I want to say one word in favor of the banker and the borrower. Sandeep, you know, there is something pro-cyclical about this rule. The moment the one-day default is declared, the share prices fall. If promoters have pledged or taken money against pledged shares, then, you know, more defaults can happen. There is a sense of pro-cyclicality about this rule, isn't it? It can be pretty brutal. What's your sense? What happens on October 1st?
No, so I think, first of all, I think that may not be as accurate as you're saying. I mean, yes, to some extent, there would be, you know, disclosure has some implications in terms of how the market treats it. But at the same time, do recognize that the market is smart enough to absorb relevant information. So there are a couple of examples given previously in terms of where there's a short-term default because of some court order and all that. And people are smart enough to figure that's not a real default, it's just a short-term issue. I'm not sure that suppressing that information is actually a greater good than disclosing that information, particularly in the last 4 or 5 years time when we've had so much of suppression of information where banks have refused to share this kind of information. I think it's high time that we get the information from the only other source, which is from the horse's mouth, which is the defaulting company.
All right. Gentlemen, we are completely out of time. Pawan Agarwal, Mr. Pradeep Kumar, Sanjay Agarwal, Sandeep and Mr. Shardul Shroff, thank you very much for joining me in this discussion. Srikanth Vadlamani too. Well, the key takeaway is that greater transparency, the minority shareholders as well as credit holders and rating agencies will immediately come to know if there is a default with the bank. Banks and borrowers will also probably move to greater disciplining of cash flows and repayments. We are in for some very, very interesting and challenging times as far as the Indian credit market is concerned. We wrap up this special show on that note. Thank you very much for watching.